welcome to this month's Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about this month's Fintech and finreg news. Now, one of the biggest things that's happened this month is the European Securities and Markets Authority released its first list of critical third-party providers at the EU level under the Digital Operational Resilience Act. Now, we've been waiting for this list for a little while. It was a relatively short list, actually, in terms of providers, and there were only 19 firms on it, including, as expected, the large cloud providers, a lot of the infrastructure providers, such as Equinix, and some of the large vendors in the market, like FIS. So certainly there's some expected names in there. Interesting to see the names that are not on there. There's also some data providers like Bloomberg and LSEG. But it is very interesting to see how short the list is, given we had an outage with Cloudflare last month that caused a lot of discussions, as I mentioned, during the InvestOps conference, and that demonstrated that there are some other third-party providers out there that sit between software as a service providers and the market themselves, or the end users themselves. So certainly a lot of food for thought in terms of discussions about DORA ongoing. We expect to see more lists coming from the individual national competent authorities, so watch this space on that front. But certainly interesting to see the commonality, and it's already been a topic of debate across the industry. In the US, as we know, there was quite a lengthy government shutdown, the longest in history, I believe, and that has now come to an end. So we've seen some more activity as the regulators in the US ramp back up again. Obviously, this week is Thanksgiving, so there's been a bit of a slowdown overall because of the holiday season, and we can expect December to be a little slower than normal as well. But certainly have been a lot of things piling up for both the SEC, the CFTC, and all the bank regulators to get on with, let alone the individual regulators at state level. We have seen a lot of work going on trying to get through the backlog of IPO applications. There are a lot of predictions out there in the market that the SEC won't be able to get through all of them before the end of the year. So there is definitely going to be a slowdown. There's going to be postponements into 2026. But we have seen a lot more activity by the CFTC and SEC. The remaining commissioners that are in place at both agencies. The CFTC published an interpretation to clarify some of its discussions around some of its initiatives related to distributed ledger. There was some focus on obviously collateral management, and there's interest in that, and pushing through some more investment in that particular area. So we are seeing some progress related to some of the initiatives related to Project Crypto as well. So a lot of focus on both sides and cooperation between the two. We've seen joint committees being set up, lots of work together to try and push that through. There's been commitments to roll back already on some of the regulations with regards to the crypto sector as well from the SEC. So we've also seen the SEC talking about revisiting regulation NMS. So that's something that we will see a roundtable on next month. So lots of discussions there. In Singapore this month, obviously, we saw the Fintech Festival, the annual Fintech Festival, which is absolutely massive, as we all know. So that went on, and we saw a lot of interesting initiatives related to AI. One of which is very cryptically named Project Mindforge. I don't know where Mass gets its names for some of its projects. They're very Bond-esque, but this one was recognised at the fair itself for being very strong public and private partnership for innovation, and the focus is on AI risk management. So certainly interesting to see some of these different hackathons and things that have been set up around that. On the topic of AI, it really literally is everywhere at the moment. The European Central Bank head, Christine Lagarde, said that the European market has to push ahead with adoption of AI or risk being left behind. There's a big focus on competition, as we all know, at the EU level at the moment. So certainly that is an interesting development to see. We are seeing initiatives related to AI across all of the different markets, the major markets outside of Europe as well. So certainly there is a lot of focus. There's also a lot of discussion at the EU level about stablecoins, crypto itself, with regards to the MiCA framework and some tweaks that may be happening around that. There has been a lot of warnings from the ECB about the potential for stablecoins to cause problems related to Eurozone bank deposits, financial stability overall as well. So lots of very big discussions going on at the European level on that. India, on the topic of stablecoins, the Reserve Bank of India has said that it prefers the option of a central bank digital currency, a CBDC, versus the stablecoin route. They have been warning, the central bank has been warning that stablecoins could be much the same as some of the European banks have been worried about the impact on monetary stability, financial stability overall. So certainly a lot of discussions about that. I should also add the SEC Division of Examinations. We always look at the list of priorities for the next year. That came out this month as well. We've had so many things coming out from the various regulators. But the priorities are interesting to see. That crypto has been taken off that list. They have said that they are going to give a reprieve to crypto, largely because they feel it has been overregulated. That's been repeatedly said by new SEC chair, Paul Atkins. He's given many, many speeches this month on the topic again. So he's been reiterating that. So it's interesting to see it reflected in the exam priorities. But they are focusing on things like cybersecurity, AI, all of the other topics that are common across the globe. In the UK, interesting to see the next Pisces platform was approved. As I mentioned, probably in one of the previous months, the UK is focusing on trying to bolster private markets investments in the UK. The FCA, the Financial Conduct Authority, launched a program called Pisces, which is focusing on setting up regulated entities or regulated markets. The second approved firm or platform to provide that is JP Jenkins, which is a relatively small outfit that has been focused on UK markets, UK private markets in particular, since 1991. So it's not a startup or a new vendor or anything like that. Interesting to see if there will be any more approvals before the end of the year. On the topic of other regulatory developments, as I said, there's lots of them. We did see a draft copy that was leaked from the European Commission of the sustainability, SFDR, the sustainability rules changes that were incoming. We've now actually seen that published. There have been some significant changes with relation to the taxonomy and the classification of funds, which will please some but not please others that actually have to implement the changes. And we are seeing somewhat of a watering down of the ESG rules all over the globe, as we can see. But certainly some big moves to try and simplify that regime, make it easier to comply with. We have also seen in the US, there's been a lot of discussion related to the US Treasury clearing rules. There have been some proposed changes after the government shutdown ended. So we have seen the SEC talking about it. There was a speech, the Commissioner Ueda indicated that there may be further changes to some of the rules related to that, related to inter-affiliate transactions, some exclusions for those. And they are now bearing in mind a lot of the industry feedback on those clearing rules. So certainly more changes to come on that. So it's going to be a very, very busy holiday period for everybody in FinReg, as you would expect. Now, my final thoughts for the month relate to the fact I actually chaired a RegTech and SupTech conference last week in Frankfurt. Now, there were, I don't know, hundreds of different regulators represented, including different central banks from all around the world, from everywhere from the British Virgin Islands through to Singapore and Australia and New Zealand. So certainly a lot of different regulators in the room, not just Europeans, which was interesting to see them all talking and collaborating with each other and discussing common problems. The first day was focused, dedicated on SupTech. It's the Regnology conference. I should explain. It's RegTech convention. It's every year. I chaired the 3 days. And I was involved in some of the discussions related to sustainable finance rules, the the Basel IV framework, and other exciting topics along those lines. So one of the things I had to do was give a speech about digital transformation and how STP was achieved, or progress has been made. I don't think we have achieved full 100% STP in many places, but certainly there was a lot of discussion about the topic of STP in the capital markets and how that could relate to regulatory reporting. Now, the theme of the conference was straight through reporting. So the concept is that you would start from the end user firms through to reporting to the regulator, having that as a completely automated process as much as possible, using common rules, common taxonomies, trying to make it as simple as possible, and humans only having to get involved if there are sort of exceptions that need to be managed and risks that need to be mitigated along that chain. So certainly interesting topic there. The discussion I had and the advice I was giving was based on some of the research we've done with regards to digital transformation processes. Lots of lessons learned. I actually did a blog on it. If you want to look up on LinkedIn, I wrote a blog about dodgeball and lessons in transformation from the buy side. I probably mentioned that last month, but definitely important lessons to be learned that even regulators can be paying attention to, given they are now trying to focus on innovation and moving away from some of their legacy platforms. There's a lot of commonality, interestingly, between regulators and the regulated in some of these challenges, the challenges of talent, the challenges of resistance within an organization, the challenges of moving off older platforms and onto newer platforms, getting end users familiar with new processes, new user interfaces. Definitely the need to build champions at each layer of the organization, regardless of whether it's a bank or a central bank or a regulator. So certainly a lot of interesting discussions there. And I think there are a lot of things that can be learned across the various sectors, particularly with related to things like data management. And obviously everybody has a challenge with regards to data. On the regulator side, they're receiving in lots and lots of data from the market, some of it in structured formats, but they are equally trying to understand unstructured formats and sentiment analysis as well, much like the banks are doing and the asset managers are doing. So certainly I think there's a lot of opportunity for discussion and cross-pollination of ideas. It's nice to see that kind of engagement happens at conferences and things like sandboxes. We are definitely seeing more collaboration between the industry and the regulators, and long may it continue, because I think we get much better regulation at the end of it.